Hello everyone, welcome back to my channel. So this video marks the end of the week number 20 in this Road to 200k challenge, and we have a lot to unpack in this video, and of course because there is one thing that we failed to describe or to mention in the previous video earlier this week. Specifically, how much did we manage to profit from the whole Estée Lauder saga? And yeah, I think it's the best way for us to start this video is to get right into it. And so I already did all the calculations beforehand in order to make it easier for you to understand how did I did it. And so yeah, let's just start by showing you how did we manage to get these profits in. And yeah, so let's see. Let's start by, first of all, in our scoreboard. I have already filtered for only showing up the Estée Lauder trades, so they are all right here. All right, and as you can see, we have this entire description over here. So basically what happened was that we basically turned the entire wheel, so 2300 shares being sold overall, and a total profit, or in this case the net capital gain, was 4,849 euros and 1 cent. And how did we manage to achieve this? So basically we have all the calculations for the average cost. So we basically we summed all the prices multiplied by all the holdings that we managed to buy. So 3 contracts, so 300 shares, it's 100,000. 3 contracts, so 300 shares, and $96 a share, and on and on and on. So because, as you can see right here, and I'm going to zoom out a little bit, this is where all the trades are. If we manage to see here the $100 acquisitions, the ones at 96, there are also 200 shares here at 97, and then once the stock dropped 20%, we bought 400 shares at 82, and then we outright bought all of these shares at these prices after that 20% drop when earnings were presented. And so this brought our average cost of acquisition to around $79.88, and we managed to sell, as you recall, our entire position at $82. All right, so this is where the sales are represented in our scoreboard, and this basically the price differential, the sale and between the sale and the acquisition times the 2300 shares, right? 23 sort of contracts times 100. This gives us the gross capital, gain or loss. And why gross? Because we are not counting the commissions. This gives us $4,875.80, and then if we manage to subtract to this gain all of this commissions, all right, not this 36 cents, 36 cents is from the cash covered put, but here if we basically sum all of this, and this is the sum of all of these commissions are this $5.54 and $4.01. You can see right here the sum of these first 5 are $5.54, and the sum of this last 4 acquisitions is $4.01. So these are in here, and then we have also to subtract $17.24, which is basically the commission that we paid to sell all the entire holding, which is, you can see the commission is here $17.24. And if we subtract all of this, this gives us the net capital gain of 4,849 euros and 1 cent. All right, and so we get all of this. How did we get did we achieve this result? I also did a calculation in here with the formulas, and here basically we subtracted from each of and every share the price of acquisition. All right, so this is the loss that we had with these holdings, and which are calculated basically between the price differential, which is over here, and then the commissions and all that. All right, and then this is the product of the sale, which gives us 90,000. And then we have also to account for these losses over here. Basically, what I had to do is to split the 1,100 shares which you bought outright, which are here, are these ones, and then I also had to split the remaining shares, which are 2, 3, 6, 8, and 12, so 12. The 12 contracts, so 1,200 shares, and I split them based on the options that we used at different times to buy these shares. I also put in here the comments for the price of acquisition, all right, of these shares, and this is the loss that we accrued on these acquisitions. And so basically, by accounting for all of this, right, and also this gain that we had on the proceeds, we managed to get this capital gain. Now, once we get the capital gain, we need to understand or to determine which is the overall result. And to know the overall result, what we had to do is sum everything which is in this column here. And you can see this is represented in this one, in this account, this calculation here. So we basically use this loss of $2,882. We also account for this loss, and then we accounted for this gain from a covered call that we sold on the shares of Estée Lauder that we had, right? And no, basically this is not about this is about the sale of this specific holding over here, the 400 shares on $82, and then we summed up all of these gains, because of course these are losses and these are gains, and the total result is this one. All right, and keep in mind that these values over here are already accounting for the commissions that we paid on the sale. All right, and so this is the overall result, $11,071, and this is where the entire calculation is. And because the net overall, the current overall result is a gain of $11,071.08, if we subtract the net gain, we can determine that the amount of premiums collected during this entire period we held Estée Lauder shares was $6,200.22 euros. $222. And so basically these were the calculations. So it was of course a nice profit, but it was an ordeal that we hope we don't have to repeat it again. So I'm going to delete these calculations here, right? And yeah, let's jump into the actual video. So as you can see right here, we are, and as you saw on the last video, we are now trading on a daily basis shares on the QQQ, which is basically the ETF that tracks the Nasdaq index, and this is a ETF that has options expiring every single day, and so we are basically trading 1 day options. And as you can see here, these are the entire results for the week. After we sold our Estée Lauder holdings, we managed to sell these options over here on Monday, which I still showed you during the video that we did earlier this week. And if we untoggle this filter over here, you'll see that this is where these trades are. All right, the QQQ puts that we sold, and also the puts on Pfizer and the puts on 4. Coming back here to our statement, as you can see here, these are the QQQ puts, the 4, and as well the Pfizer puts. And now, as you can see right here, these puts on Pfizer expire worthless, as you can see right here. However, and this was of course a tricky development, because these are the actual puts that we showed down here, 4 puts, and even though the price of Pfizer came down to below 25.50 for most of the week, on Friday, so yesterday, the price recovered to be above 25.50, because as you can see right here, the price rose to 25.54, so the puts expired worthless, right? So this put right here, which is here, so we left it go until maturity, and it expired worthless, right? And so we had this profit over here, which is not that much, but this is where we stand in terms of this particular put. And the 4 shares right here, the 4 puts actually expire in the money, and so that is why we were assigned, all right, and we had to buy 400 shares of 1050 of 4, and because of that we need of course to put this in our scoreboard as well. And this is where we stand here. We didn't pay anything, but these shares were assigned, all right? And let's just put right here the value per each, let's just say the mark-to-market value. So because we bought the shares at 1050 and it's 1039, let's just put in here 11 cents, right, to account for this mark-to-market loss, which of course is not going to be like that for the future, because the price will move. But then we'll have to adjust here, put here the calculations to see how much we would have to sell this stock in order to break even. And now, because we bought these shares at 1050, our average price will also come down, and it's no longer be $13.30. And so let's just put right here. So let's open here another parenthesis, and we need now to do this here, and this is the price of acquisition. These are the number of contracts, all right? And now we have to sum here the number of contracts as well in order to get the average price. And as you can see right here, now the average price is 11.93, which means that this now enable us to be able to sell calls and try to get rid of these shares at a strike price of 12. And we are of course hoping that this call becomes available for 4. Otherwise we will have to basically sell more puts and bring down further the average price. For some reason now I'm not getting the option chain of 4. Let's see. All right, here it is. And as you can see right here, for next week it's already available, the 12, but of course it's a very meager premium, so we are not going to do anything in the meantime. We just wait and see what happens. If we were to use a 12-week call option, it's still a very, very small premium, so we're not going to bother with that. There's nothing we can do now. And yeah, basically we'll have to wait and see what happens. Even here for 3 weeks is 2 cents, so it's not worth at all. We'll have to buy more shares and further lower the average price. Now, as things stand, we have to now input the rest of the trades, because we also, the next day, we also sold more puts on Pfizer at a lower strike price, just 25, just to get more additional premium, and also because if it brings down even below the 25, it would be an interesting price for us to buy and lower our average price even further. But it ended up not coming to fruition because the price stayed even above 25.50. So basically, yeah, this is it. And besides this, we always sold every single day either calls or puts on QQQ, and accumulating some premium always in the meantime. And just for you to get a measure of how much premium we managed to attain, we managed to attain a premium of around $999, as you can see here. I'm going to do the calculation for you. So $93 for this put here on QQQ on Monday. And then here we sold a call on QQQ because our puts were assigned. We had the shares, now we had to sell calls. So we basically managed to get $279 on this particular call. And then the next day we managed to get $303 because we sold another call on it. These were finally assigned, and then we basically sold more puts on it. So, and then we managed to get $180. And on Friday we managed to get $144. So we got $999 just for a week of selling options on QQQ. And now we have to put this in our scoreboard, as you can see right here. Keep in mind that the commissions are not appearing in here, but we can retrieve them by looking at the daily account statement. But for now, let's just finish this off. And but before that, yeah, this is good. This is still the average price we have on Pfizer. All right, so continuing from here, this price was assigned. At this point, it's irrelevant because these puts were assigned, but then we sold back the shares, so there is nothing we can do. Let's just put here assigned and say that, of course, we managed to sell those back. So let's use here the green color to say that we were assigned. I'm going to have to put here the calculation of how much we managed to accrue by turning the wheel, because we still got a capital gain on that. But let's see. Let's try here this one, for example. So here it is. All right. So basically what we got is so this is 500. All right. Times the contracts times 100. This is the premium, this is the commission, and then we got the commission on the exit, and as well we have to basically delete this because this does not matter. All right, here, so basically we would have this loss, but then we managed to sell it back. Now, just by the way, I'm going to do this with the 4 here. As you can see now, here is the calculation. This is the average price. This is the price at which we have to sell this bucket of shares to make sure we break even. So it's 10.46. Now let's input the rest of the trades. So we managed to be assigned. Now for the next day we sold a call on the QQQ. Now let's do this. So let's put here my mistake, 10, and this expired also at 10. Here we managed to forget, here we need to put here it's also for 1 day. All right, so here we also need to put in here, I forgot to add, we bought here 400 shares on 4, and here on the QQQ we bought 300. Right, so now this is accurate. Here for the QQQ trade we managed to also finish this on the same day. Now we sold a covered call. The price, I believe it was 524. This was actually 524, right? These were 3 contracts. This collateral is not correct because this is the actual collateral. This is how much we put in there. So basically we're going to have to come here, do this, right, and also bring this up here and lock it, right, and lock this one as well. This is the actual collateral. And let's see, whatever else. This is not correct, right? So we managed to get for 93 cents. We need to see how much the commission is. So we are going to download our account statement for the 10th, right? This is a new screen that probably you never saw before. So this will be on the 10th, right, daily, and we are going to have a view here. And as you can see, let's see how much we pay in commissions. So we managed to have, let's see what it is, symbol price, transaction. Yeah, this is the call, and we paid actually 145 if I'm not mistaken in commissions. Let's see. So yeah, this is mark to market, the commissions. Yeah, because this expired in the money, we bought the shares, so there is nothing to be concerned about here. Yeah, this is the continuation of what comes from here. And so yeah, try the current 300, 500. Yeah, this is actually correct. So much we lost in this trade when the options were assigned. And yeah, this is it, because there are no other commissions. We have the only commission we have is in here. So it's 1.45 that we managed to pay. And as you can see right here, let's just duplicate this. Probably it's better to do it this way. Right. And now, as you can see, yeah, this expired worthless, so there is nothing we can do here. We basically put zeros on this, expired. This of course was a much better return. Keep in mind that the returns on the QQQ are never too big because the premiums are relatively lower because it's an index, and so the volatility is not as big. So because of that, the market does not price big premiums into options on an index, basically. Now, this option that we need also to account for in here is the puts that we sold on Pfizer, right, which are right here. As you can see, on the 10th, we sold 4 puts on 25 cents, right, at a premium of 4 cents and a commission of 1.2. So 4 cents, commission 1.2. Now we sold a cash covered put with a strike price of 25 and also 4 contracts, which ended up also expiring worthless. All right, so far so good. Now for the next day, because this is basically done here, for the next day we also said this expired worthless, so this is done, I believe. Yeah, this is done. The next day, on the 11th, which is Wednesday, we managed to sell calls with a strike of 526 on the QQQ with a 101 premium. All right, so just so that we don't forget this, 3 contracts, 526. This is again a covered call, and of course this is the actual collateral. QQQ. Let's just bring this down here. If we drag, it gives you this. All right, and in here, as you can see, we managed on yes, we managed to get assigned on this call, on this particular call. This was assigned, so we basically sold the shares, right, at 526. At the moment, we are not sure how much we paid in commissions. Am I right? Yeah, I am right. So basically, we have to go back to our daily activity statement, and we're going to have to retrieve the one on the 11th. This takes, of course, a bit longer, but yeah, for some reason it is not showing how much we paid in premiums, but never mind, we do it either way. So this is for December 11th, and as you can see right here, we also sold these 3 calls, and with the commissions on 146. So it's 146. 46, and this was assigned, right? And because of that, this basically we have to calculate how much we gain on here. So plus this QQQ plus this QQQ, because we sold these 2 calls, so this needs to be added. All right, and so here it is. All right, so this brings down. Now, as you can see, we managed to sell a 526, so we need to add here the 526, and this per share price, the denominator goes away, and so we managed to get this profit, basically. All right, which is quite good. I will put back here a similar comment of what we have in here, but we can just say here. All right, this is done. Yeah, basically we're gonna have to do it in here. So this were 300 shares sold, well done, with capital gain of or loss of, so these were 300 shares and we earned $3 on each, so it was $900 of capital gains, because as you can see right here, we sold at 526 and we bought at 523, so we had $900 in capital gains. And of course, because the difference is how much we collected in premiums, 900, if we subtract from this 1500, basically we had a premium of 700 and actually $670.03. So 603 profit from premiums, right? And this of course makes sense. I believe that this is correct, yeah, because if we sum this two values over here, and I'm going to just do the calculation here, if we manage to do this and also get this, you see that this is the value, that $670.03 from the premiums we got. So this is correct. Let's just save this so that we don't lose it. Now continuing from here, because we sold these shares, we come back again to selling the puts again on the Thursday. And as you can see right here, we sold again 3 puts. It doesn't show for some reason the commission, so we will have to retrieve it once again. We sold puts on the strike price of 525. So let's go there again. Might as well just bring this down. For some reason this is not dragging, but now it does. It's 12. All right, so this is QQQ. We sold a cash covered put, strike price 525, 3 contracts. We managed to get in premiums, let's see, so we managed to get $180, all right, and we need now to know how much commission did we pay. So we come back here to our account statements. Let's see, for Thursday, so December the 12th, and let's have a look. And as you can see here, for the QQQ puts 525, 12th of December, we paid 60 cents on commissions, which is less than the previous ones, which is nice, right? And as you can see right here, also in our trades, in the records of our trades, you see that these expire worthless, so we didn't do anything with them. They simply fell away and this expired. Now this is probably not correct. There must be something wrong here. Let's just drag here and see. There must, oh, 180. No, this is wrong. It's not 180. It was 60 cents. Yeah, I put here 180 because it's the total. Yeah, now it's correct. Yeah, total mistake, but still, it was a good return, 41%. All right, now on to the last day, which was yesterday. We also sold some puts on the QQQ right here. Now the strike price, I believe it was the same or not. No, it was not the same. It was 528. So 528, 3 contracts as well. And this time we have the commission and we have the premium. So 48 cents and a commission of 62 cents. So 48 cents, 62 cents. And it also expired worthless with also, yeah, as a reasonable return. As you can see right here, this QQQ puts expired worthless, so we don't have to buy anything from them. And so this is it. One thing that I want to get your attention is that I saw that the premiums, of course, for when you are on Friday, you can sell puts expiring on the same day, Friday, or a new alternative that we can do is basically sell the puts on Friday, but the puts expire on Monday. So it's more than a day, but there is no trading over the weekend, of course. But there is this theory that also the options lose some value, meaning the theta, which is the option Greek, in which tells us how much the option price changes due to the passage of time. The theta also continues to decrease during the weekend. That is this theory. I heard both sides of the spectrum, that this does occur, and also I heard that this does not occur. Options do not lose value over the weekend. But probably next week, when it comes to Friday, I will try, if I see that the premiums make sense, because if the premium for the option for that expires on Monday is way larger than the double, let's just say roughly the double of the 1 day option, probably there is some truth in the possibility that the options lose value over the weekend. And so this is something that I will consider depending on how much the premiums are. But yeah, we'll have to see what happens. For the time being, this is all. This was a quite productive week. As you can see now, we are still on a mission to try to offload these Pfizer shares and these 4 motor company shares. But yeah, we'll have to wait and see what's going to happen. Probably due to the fact that I made a lot of deposits to be able to get out of the this OD trade, I will have to do some changes. Fundamental changes about this challenge, but this will come at a later video, as soon as I make a decision on that. But for the time being, yeah, this is it. Feel free to leave your comments below and your suggestions in the comment section below. Also feel free to like the video and subscribe to the channel. I'm also available on LinkedIn in case you want to send me a DM and basically exchange some insights on this. And we'll reconvene next Monday for the start of the week 21 of this 200K road to 200K challenge. I'll see you there.